Hello and welcome to Tax Matters. My name is Olumuyiwa Matuluko. Today's episode of Tax Matters is going to be a taxpayers episode. As we did not too long ago on the program, we're going to yield the floor to taxpayers. We're going to allow taxpayers to share their experiences with us, to share their pains and joys in this whole business of voluntary tax compliance. And in doing this, we're going to be guided by two events. The first being the Chief Financial Officers Forum, organized by a leading accounting firm on the 23rd of March 2018. We shared with you excerpts from that event on the last episode of the program. The second event is the sensitization and awareness creation program put together for micro, small and medium enterprises by the Federal Inland Revenue Service, the Joint Tax Board, and SMEDAN. The event, which was held in Lagos on the 18th of April 2018, was said to be the first in a series of such events to be held for the education of micro, small and medium enterprises in the 6 geopolitical zones of Nigeria. Of course, reactions from tax administrators will balance the equation. It's going to be a balanced diet on this episode. And permit us to begin from the rear.
It's only government that imposes taxes. Like me as an individual, I cannot come and block a road and say I want to collect tax, individual tax. Any motorist flying this MKO Abiola Garden must pay tax to me. No. It's only government that can impose tax. The tax is on profit, income, consumption, and gain. The profit of a company, the company will pay company income tax, 30% and EDT of 2%. Then for an individual, if you earn an income, you pay your payee. Then for consumptions, when you consume a particular type of product that is barterable, you pay value-added tax based on the provision of the law. Also, on the gains, when you dispose your building in Ikoyi here, you bought it 1 million and you sold it at 1.5 million. You are going to pay what we call capital gain tax at 10% on the chargeable gain.
On tax incentives to micro, small and medium enterprises.
What are the various incentives that SMEs use to or can get for them to improve their taxes? When they apply for final status, we all know that final status is a tax-free holiday for 3 years, which will be renewable after with another 2 years. Then under tax-free holiday, any dividend declared by the SMEs or a company, they will not pay dividend. Also, we have capital allowances carried forward. They will not pay tax on the dividend. That's the withholding tax. When a company wants to pay you your dividend, you get it 100% if that company is on pioneer status. Then also capital allowances carried forward. When a company enjoys pioneer status for 3 or 5 years and he has accumulated capital allowance, they can carry it forward. Then also we have the exemption from minimum tax for SMEs. For the first 5 years, they will not pay minimum tax if they are in agricultural business or if they are in manufacturing. The concept of minimum tax, we are looking at it from 3 angles. That's when the accessible profit amount to a loss, or when accessible profit amount to no tax payable. The tax payable is nil, or tax payable is less than the minimum tax. The minimum tax computation is of 2 types. We have A part and B part. 0.5% of the gross profit and turnover, 10.5% of the net assets, 0.25 of the paid up capital. Then any excess of turnover of 500,000, then the company will pay 0.125% of the excess turnover. That's the computation of the minimum tax. So minimum tax basically is based on the financial statement of the company, from the profit and loss account and the balance sheet or the financial statement positions. So any company in agricultural business or manufacturing will not pay minimum tax provisions. Also, other incentives to the small and medium enterprise is the issue of carry forward of losses. A company that made losses can carry it forward indefinitely. So we have a restriction from the insurance angle. So if an SME is in insurance business, we will not enjoy that provisions. Because for insurance sector, the maximum is 4 years. Now also, another incentive is that the company income tax, we say that company income tax is 30% of the total profit. So for SMEs that has a turnover of less than 1 million, they will be subjected to only 20% as company income tax for the first 5 years. Also, dividend received from a small company in the sector in the first 5 years of operation is also exempted from tax. That's another incentive. Then we have restriction of capital allowances based on the second schedule of CETA, paragraph 24, subsection 7. That is, a capital allowances of other businesses, you have to restrict it to 66(2)/3. But for this type of businesses, you can allow all the capital allowances. The company can enjoy all the capital allowances. You cannot restrict for agricultural and manufacturing businesses.
What are the requirements of a good record keeping? It has to be simple to use. It has to be easy to understand. It has to be accurate. It must be up to date. If we make transactions every day and we want to wait till the end of the week or end of the month, there's a tendency for us to lose sight of some of the transactions. So it is advisable that we do record daily. At the end of the day, close of business, record whatever transactions we have done for the day. And this will enable you to keep adequate record and you won't miss out on any of your transactions.
And then the main item on the agenda, the stakeholders' interactive session.
What I'm going to say has nothing to do with me as a person. I have a TIN number, so I pay my tax. But I want to tell you that a lot of the women don't like you because your tone is very confrontational. I believe that tax, yes, it pays to pay tax. It is the law. But I think gentle persuasion, being part of product development, being less elitist in some of these interventions will help FIRS capture more people into the taxpayer base.
When we were talking about the incentives, the tax incentives, the 20% for 1 million naira turnover, I want to give you this information. Even the micro businesses do more than 1 million naira turnover a year. It is very rare for you to see a business that does less than 2 million. The woman that came out said she does 200,000 per month. That means she does 2.4 million turnover a year. Now, what does that mean? That means that the 1 million naira you're talking about, 20% incentive is no incentive at all, because you rarely find micro, I'm not talking of small businesses now, in that category. So we can as well say that there's no incentive on that level. I, for one, believe that if you want to introduce that incentive, you should raise the minimum turnover to like 5 million.
I want to talk on the area of VAT. Actually, there is a flat rate of VAT in this country, which I believe is 5% across board. But one thing we want to realize is the fact that SMEs or micro enterprises are a different type of business organization that needs to be assisted rather than adding to their burden. Because the situation whereby the micro is I would say, maybe trying to be on the same level with the bigger multinational on flat VAT rate is not ideal. Not ideal in the sense that if you look at the SME we have in this country, is almost about 37 million. I'm a paint manufacturer. The big multinational are producing paint at the same time while I'm producing. We are trying to see how we can manage ourselves and be able to get sales. If we have to add additional 5%, which the same multinational are adding to their own, definitely you can discover the fact that it will increase our cost, despite the fact that they are buying at a very lower rate most of their raw materials unlike we that are going to the market to buy on retails. I believe I'm making some communication. So my suggestion will go this way. One, we should bring a separate or advise the government to have a special VAT rate for SMEs and the micro. Because if I should add 5% to what I'm producing, despite the fact that I'm struggling to at least sell at the same price with the multinational, then any customer who wants to buy with me will prefer going to the multinational.
The paper presenters and the tax administrators in attendance responded to the issues raised.
Let me say that as the Executive Secretary of the JTB, I also sit on the the Implementation Committee for the Tax Policy. And one of the issues that have come up is consideration of having some incentive on VAT for some categories of businesses. And I think the suggestion you are making to further support micro, small, and medium enterprises to have a reduced rate of VAT is in line with some of the objectives of the National Tax Policy. And at that committee level, I will also raise it because concession has been given to some other categories as to the VAT they pay in order to encourage them.
What are the status and tax obligations of micro, small, and medium enterprises under the various tax laws?
One of the issues that keep coming up, we want to either define which of these businesses are micro, small, and medium enterprises, or what is the level of classification that you give to them. Like I said today in my opening remarks, one of the most important things is for us to realize that these categories of business are largely unincorporated. Most of them belong to the informal sector. So some of the issues you are raising in terms of compliance differ. And that's why we came up with the presumptive tax regime. The presumptive tax law, as it were, was to encourage small, unincorporated businesses on how to keep basic records so that you can be able to access them to tax. And it gives a step-by-step guide on how this can be achieved. And that's why he said, for a start, it's a presumptive that you don't know the income they earn, but you put them on a flat rate and work with them to keep some basic records to be able to establish how much they earn. But you find out most of these bodies are largely dealing with the state revenue authority. Is that not correct? So the issue of presenting financial statement that meets international standards do not even arise as at now, unless we are saying that we have majority of your members as incorporated entities, in which case we now graduate them. They become the very, not just medium engaged SMEs, they become the super SMEs. And in doing that, they easily fall into the tax net of the Federal Inland Revenue Service. I know, having been chairman of a state revenue board, that the state revenue authorities have taken steps towards doing a proper enumeration of those who fall into this category. And what happens under that scheme is that it's not the business entity that is taxed. It's you, the individual, that owns that business that is taxed. But they are using the business as a basis for assessing your income to tax. Therefore, you must streamline what is business and what is yours. And it's in doing that that the presumptive tax law came into being. So the only interface you will be having now with the Federal Inland Revenue is in the area of value-added tax. The VAT is not paid by you. The VAT is paid by who these goods or services is being rendered to. And therefore, you become a registered agent of government in collecting VAT. That is where we come with the issue of how best do we make our returns. There are different procedures for making return as an individual and making return as a corporate entity. There are 3 forms of returns. For you, even if you are not incorporated and you have people that work for you, you must make returns as to the salaries and the employees in that organization. And you must also file your own return as the entrepreneur who owns that business. And then, of course, you must file your return regarding third parties that you transact with that ought to suffer one tax or the other, either withholding tax or VAT to the Federal Inland Revenue Service.
The Executive Chairman, Federal Inland Revenue Service, was represented at the event by the Director, Federal Enlightenment and Engagement Tax Teams, Mr. Kunle Oseni.
This event is one of many interventions in alignment with the focus of the Presidential Enabling Business Environment Council, that's PBEC, Making Business Work Initiative. This program was developed as a collaboration between the Joint Tax Board, Small and Medium Enterprises Development Agency of Nigeria, and the FRS in order to engage business owners directly at the point of their need. MSMEs are recognized as the engine of economic growth and development in developing economies with the capacity to effect wealth, income distribution, as well as create new jobs, even in a stagnant economy. In Nigeria, MSME constitutes about 97% of operating businesses in Nigeria and generate close to 50% of its employment opportunities.
Still on the importance of SMEs in every economy.
All over the world, MSMEs are the primary drivers of employment, wealth creation, and poverty alleviation. In other jurisdictions across the world, MSMEs clearly play significant roles in economic development. For instance, Chinese MSMEs employ about 75% of the workforce. In the UK, 54%. In the US, 55%. And in Brazil, about 70%. It is therefore MSMEs that will create enough jobs to meet our needs as a country, especially as we drive towards the diversification of the Nigerian economy.
Welcome once again. The program is Tax Matters, and it is the Taxpayers episode. We are hearing from the taxpayers, from the small boys to the big boys. We begin with Mrs. Oyeyimika Adeboye, who spoke at the KPMG Chief Financial Officers Forum.
I think the second thing is, broadening the base. We feel that, when I talk to other CFOs who hopefully will agree with me, we feel that we are the same ones that you keep hunting over and over and over again. And again, I'll give an example because I like to be realistic about those things. As I said, we've had tax investigation, we've had audit. Late last year, I got a letter. The years I've been audited for, that I've had a letter clearing me. I got a letter with an assessment for the same years. So I got confused and I thought, what is this all about again? In summary, it simply said, your capital allowance, we're going to disallow it because we don't believe it. And I'm paraphrasing. This isn't the words, but this is what I read to it. And what amazed me is that to get capital allowance, you have to have the Ministry of Industry guys come to inspect, and they came and they saw a brand new Bombita line, $35 million, which is the basis of our capital allowance. Now, we now have to go through this process again of having somebody come and have a look and check, which is fine because, I'm confident that we have no issues and we'll prove ourselves. But the resources we have to put behind just reproving ourselves over and over again. I'm wondering if that effort cannot be put into finding other people who are yet to be brought into the tax net to pay their taxes. There are people out there. The other thing I'd like to ask for is, the tax laws, I believe, in Nigeria have been designed, and I'm saying this controversially, but this is how we see it in the private sector, have been designed to permit what I call gray areas that nobody can interpret. There's no black or white. I trained in the UK, and I was a tax consultant in the UK for 6 years. The VAT laws in the UK are in volumes. Okay, so I had clients who had tax issues. The VAT laws are in volumes, volume 1, 2, 3. At the time I left, there were 11 volumes. I can imagine that there are bigger volumes now, but thank God for technology to be online. The tax law, the VAT law in Nigeria is a little booklet. For me, that gives room to interpretation of is it not, what is zero rated, what is exempt. It's not clear. So when you get your tax audit being done, you are sitting before a tax auditor who has a set mind that this is my own interpretation. And myself, knowing fully well that the background of Nigerian taxes is actually coming from the UK, in essence, a few modifications, I'm saying, but that isn't the intention of the law. And I'm being showed a book with one paragraph that says, this is the law, period. Sometimes you get treated like we're almost criminals. You get checked and rechecked over and over again on something that you're beginning to wonder, is there something else that I've done? And there must be more people out there who aren't paying. And I'm sure that the formal sector is probably 10% of the net. I believe there's 90% out there that you still need to get to.
Mr. Wole Obayomi was also a member of the panel of discussants.
I believe tax to GDP ratio can be enhanced, and the resources are there for government to be able to do that. The people are there. For instance, okay, in the informal sector, for instance, there is a limit to how much cash people can keep in their homes. So, some of the millions have to be in the banks, if not billions. And what collaboration does the FRS have with the banks, with the central bank? If you need to make a law or a regulation in order to ensure that FRS, the state authorities, can leverage on the customer's bank data to be able to ask them questions as to how much they need to pay, that should be done. Technology, some progress is being made, but it's actually too slow. Technology is an accelerator for any business activity. Okay, it's okay to file VAT, but we also need to be able to file company's income tax returns. So June is coming now, 30th June. We'd like to really see that happen so that all taxpayers, as many as want to use technology to file their returns online, will be able to do that.
From the Tax Administrator's Corner, Mr. Babatunde Fowler, Executive Chairman FIRS, was on hand to clarify issues. On tax audit.
Now, first of all, we openly talked to all staff who wanted to join the audit section, and they were given a test to at least know their own capacities. Those who did not score high enough were dropped out of audit. Well, first of all, we want to change the process for corporate organizations that we can trust. I'll use that word to trust. We will have to audit you every year, and it will now be risk-based.
On the use of ICT.
In terms of the access to withholding tax accounts, we're in that process. We are loading on our system the last 6 years of all withholding tax credits paid on your behalf. And I believe by the end of this month, the touch of a button, you should be able to see all your withholding tax credits. And basically, like I said, going forward, right now, if anyone pays withholding tax on your team, you can print the receipts immediately. So we are next to that process whereby if you do a contract and withholding tax is deducted, you will know within 45 days whether the state government or that corporate organization has remitted the withholding tax. And if they don't, contact us. And of course, free of charge, we will chase that company or that state government or that federal MD that deducted the withholding tax and did not remit. So we have to work together.
London, New York or Lagos, business or holiday, home or office, you can now carry out your tax transactions from anywhere in the world. You can now file all your tax returns, pay online, get a receipt and even process your tax clearance certificate from anywhere in the world online and in real time. All you need to do is log on to www.firs.gov.ng and click on e-services and be introduced to the world of innovation, convenience and transparency from the FIRS. You can also pay stamp duty as you register a new company with the CAC or for other transactions that require stamp duty payment online. You can also file your withholding tax returns and determine the withholding tax deducted from you is in government coffers so that you can get your receipt within 45 days as long as the deduction has been remitted. Yes, all of this and more online at www.firs.gov.ng/e-services. FIRS, making tax administration as easy as ABC. Please note that all FIRS services are free of charge. This message is from the Federal Inland Revenue Service. It pays to pay your tax.
There you are. Vox Populi, Vox Dei. The voice of the people is the voice of God. We do hope that those who spoke presented some of your concerns. And we also do hope that you agree that the tax administrators at all levels are on top of their game, that they are ready to listen to you. The conversation continues by mail, by text, by voice calls, by Twitter. See you next week. Thank you for watching.